Ladies and gentlemen, please welcome CMO of the LendingCoin, Mindy Ngo.
Yes, so crazy right now. Most incredibly, it's your girl, Reed. It's your boy, Young.
All right, thank you so much for being here. Welcome to blockchain. What is blockchain? Are you ready? Next, we have Phil Sigler from the Boise TechMall, and then Dan DeCloss from PlexTrac, and Pete from ULedger. Thank you.
All those things I shouldn't do, but you dance, dance, dance. And ain't nobody leaving soon, so keep dancing. I can't stop the feeling. So just dance.
So Phil, can you please give an introduction and how you got involved into blockchain?
Sure. So I've been running high-tech businesses in the Treasure Valley for the past 20 years. Started out with a company called SR Systems, went to a company called Computer Central, and which is still in existence today. And these businesses allowed me to invest in other projects. I've been big into real estate and created the Boise TechMall about 4 years ago. And when I built this building, I had this kid come up to me and says, can I put a Bitcoin ATM in your mall? And I'm like, well, what's a Bitcoin? And maybe some of you here might be having that same thought. And when he expressed it to me, he said, it's digital money you send through the internet, and it's really high tech. I'm like, well, you said two of my favorite words, money and high tech, so why not? And so I sat there and watched for about a year where people come in and put cash in this dinky white box ATM. And people just kept lining up and coming into my mall and using it. And a year later, this kid comes up and says, hey, I got some bad news. I got to take this Bitcoin ATM out of your mall because it's requiring a newer model and it's coming out of Czechoslovakia and it's like 16 grand. I'm just a college kid, don't have money. And I'm like, well, as a serial entrepreneur, I'm like, well, do you mind if I buy one and bring it in? And he's like, no, that'd be great. It'd be a place I could buy some Bitcoin. So anyway, I bring in this Bitcoin ATM where I met Mindy here who helped me program it, and we get it set up, and he says, well, if you're gonna bring this in, you need to have at least 100 Bitcoins to operate it, because when people come in and buy a Bitcoin, you have to have enough to cover that. And I'm like, ooh, well, how much is 100 Bitcoin? He's like, they're super expensive right now. They're like $200 a piece. So it was a $20,000 investment that I put in, and a year and a half later turned into $2 million. So that really changed my focus. 'Cause after running all these businesses for many years, and we've had some great success in them, but nothing that quick and that fast. So that really changed my whole focus. For the past 3.5 years now, I have lived and breathed cryptocurrency and really understanding the cryptography behind it and the blockchain.
Thank you. Dan, what about your experience in blockchain?
Yeah, so my background in general is in cybersecurity, and on the application security side, doing application security pen tests, penetration testings, hacking websites, hacking applications, doing source code reviews. So I'm a technologist at heart and trying to figure out how things work. So when I was in consulting, several members on my team were into the mining of the cryptocurrencies, and that's kind of where I first got exposed to it. So I dug in a little bit deeper to the technology. And so throughout the years, I've done security assessments on blockchain companies, or done security advising for small startup companies that are doing blockchain technology and cryptocurrencies. Evaluated, from a security perspective, evaluated hardware and software wallets and other applications that are utilizing blockchain and cryptocurrency primarily. But I know we'll talk a lot more about the other use cases for blockchain. But that's my background in blockchain.
Pete?
Sure. Well, my background is software and technology for a number of years. I won't give you the number, but it's been a number of years, all in non-blockchain stuff. And I always tend towards small companies that are doing something, interesting, typically disruptive. Those companies grow, get acquired, and it's time to kind of do that again. So, a couple of years ago, I got wind of a company here in Boise called ULedger that was doing work with blockchain technology. And all I knew about blockchain technology was really Bitcoin and what the how Bitcoin had evolved and what the technology was able to do for cryptocurrencies. So, in talking to this company, the intriguing thing to me was they were looking at blockchain for use cases other than cryptocurrencies and doing it in such a way that businesses, enterprises, and governments and so on could benefit from it. So that was kind of intriguing. I didn't really know what those use cases could be, and once I learned, I didn't really understand how they could be satisfied with blockchain technology as it pertained to cryptocurrency. So kind of dug into that and fell down the rabbit hole, as they say, and the chance to join another small company, build out a product that's using new and cutting-edge technology to solve compelling business problems, well, that was too good to pass up. So jumped in the deep end and been there ever since.
Thank you. So a lot of us have questions about what is blockchain beyond cryptocurrency. I'm sure we've heard about Bitcoin, what it is, the volatility, but what is that blockchain, if you can break it down for us?
Yeah, so blockchain is the underlying technology. I mean, it was genuinely originated from the concept of cryptocurrency, started around the Great Recession, where the concept of getting away from a centralized bank to do transactions and to validate transactions. So the blockchain is actually the technology for which cryptocurrencies reside, and then also opens up for a lot of other opportunities. So in its simplest form, it's genuinely a chain of blocks where the blocks contain information, and that information has to adhere to certain tenets, right? So being immutable, meaning that you can't change it, provides that data integrity to be able to validate that everything in the chain hasn't been modified. It has to adhere to the tenet of transparency. So especially in the cryptocurrency world, being able to have some anonymity, but also being transparent of the transactions that are occurring. So that's an important tenet. It has to be secure. So the reason we call it crypto is because at its underpinnings is cryptography technology, particularly when it comes to hashing technology. So being able to take an input of data, run a crypto hashing algorithm on that data, and receiving what they call a hash. And that hash uniquely identifies the input. And so that is what is added to the blockchain to be able to validate that data has not been manipulated. Anytime somebody tries to manipulate the data, the hash changes, and that hash then affects every hash in the sequence. Therefore, you can verify that there's not immutability. So that's kind of at its as simple as I can explain it. Hopefully, I didn't go too far over people's heads, but it's just data that's verified in a sequence forever and ever.
Thank you so much. So Phil, can you break down how it's being used at your business?
Yeah, so when cryptocurrency was on a rise, and I was sharing with all my friends and acquaintances and family members and so forth, saying, hey, you should get into this. There was two major resistance that kept coming up. And number one was, well, what's backing it? And number two, is this regulated, or is this even legal? What's really behind this? And so I looked at it as a need to solve. And so we had a team of 10 people that got together and solved that by creating a company called the LendingCoin. And the LendingCoin is a fully asset-backed cryptocurrency that we go around and finance commercial buildings. And we're doing it currently at 0.25 below prime. And on top of that, we are a full security. So unlike many other people that have launched and tried to launch a cryptocurrency, and there's a lot of ones out there that are not legit. I currently own 43 of them. And there's some that are totally operating, I think, definitely in the US it would never fly, but outside the US it works. Well, we didn't want to push any luck. We wanted to make sure that everything was 100% legal. And so the right way of doing that is to do a Reg D offering and a Reg S. So Reg D is for accredited investors. So people that have $1 million in assets are able to invest in early startups, such as or early security startups. And then a Reg S is for foreign investments. And so we're using cryptocurrency to finance commercial properties. We are the first ones in the world to take a property and finance it using the blockchain technology. We took the deed of trust also of that building that we financed and put that linked it to the blockchain. So again, it's immutable, like Dan was sharing. So all of the investors can track each investment that comes into the LendingCoin, as well as track all the properties that's being financed. So at the end of every year, everybody could see the profits and so forth, and then we could choose to send out distributions and so forth. So we're excited to have a possible Reg A Plus offering, which would be a public offering that comes out. Our goal is at the end of this year.
Perfect. Thank you so much. Pete, how does ULedger use blockchain technology?
Sure. So what we're basically doing is exposing the capability of blockchain, providing the capability of blockchain that Dan mentioned, its ability to create an immutable, distributed, and tamper-proof history of data. That's basically blockchain's essential feature, right? That's what makes it work for cryptocurrencies, but it also enables other things as well. Businesses can make use of that feature, that ability to create an immutable, provable history of data. The thing that companies have to wrestle with now is that they all deal with data, right, that's important in some way or another. We all live in this environment where we transact in data all the time. We have to store data. We have to manage it. We transfer it to and from other parties. None of that data is provable. That's kind of an issue that nobody thinks about because we've grown up in this environment where we've got databases, everybody owns databases, they own their own data, but there's no provability, right? All that data is kept centrally. You have to trust the party that maintains that database, and the data can't really be proved in any way. If you need to prove it, you need to enlist the services of a third party, like an auditor, somebody like that, who can come in and kind of look at how your data is structured, look at how you run your business, and basically what they do is they vouch for you. They vouch for how good your data is. So the ability to create your own provable history of data is compelling for businesses, and that's the capability that we're working on exposing. And like I mentioned before, we're building a product that specifically does this, specifically allows businesses to do this in a very minimally invasive way. And in a way that leverages blockchain technology, but in a very different way than it has been applied to cryptocurrency in the past. So that's what we're up to.
Dan, how do you see what are the use cases as blockchain being used today in the world?
Yeah, I think it's interesting, and one aspect that I forgot to kind of mention is the decentralized aspect, where it's really important that there is in the blockchain it's considered a network of nodes that are doing those hashing calculations, and so that's what provides the integrity of. You have to come to a majority agreement on this is the data that's going to be put onto the blockchain. So that provides a lot of scenarios that are actually being taken advantage of today. I think what's kind of interesting, and it's also cybersecurity related. In the cybersecurity space, we have a big problem of trying to identify identification and authentication, right? I say I'm Dan DeCloss, and I can give you a password that I'm now able to log into this website, but is it really me that's logging into this website? Or I'm going to go vote, and I show you my identification card, and that kind of proves my identity. But areas like in Switzerland, they've deployed a blockchain for voting mechanisms. So being able to prove you are who you say you are, and being able to cast your vote on the blockchain as well provides that anonymity, and then also proves that that I'm not pretending to be somebody I'm not. So I think that's an interesting use case. They mentioned on the panel before, that Walmart is working with the supply chain for food processing, that they can validate every step of the way and make that process faster, so it reduces the risk of bacteria and illnesses being spread through our food, and then also being able to trace those when outbreaks happen, trace those a lot faster. I did grad school in California, and it was right near Salinas, California, where right at the time there was a big outbreak of salmonella, and it was traced eventually back to some of the farms, the spinach farms in Salinas there, Salinas Valley, and so that one actually hits pretty home, because that was a very big story. So blockchain is being used for things like that, where you can validate transactions or how things process throughout the entire life cycle of a product or like I said, supply chain. So those are some interesting use cases today. There's lots of other opportunities, I think, that people are continuing to explore of basically anything that requires some sort of validation of data and integrity. There's an opportunity that blockchain can serve.
That's fascinating. Thank you. So, Phil, why should business owners care about blockchain?
So yeah, as a business owner, I'm always looking for ways to save money, cut costs, and one of my companies, we pay about 30 grand a year in merchant fees. And you mentioned a little bit about mining, and so there's a cryptocurrency mining, and so I started a nice sized farm here where I was mining a bunch of cryptocurrencies. And in order for me to buy these machines, they came out of China. It's called ASICs mining chips, and from Bitmain. And so I bought about 200 grand worth of these mining rigs. And because we have good power here, thankfully for Idaho, our power rates are about 4.5 cents if you're really pushing a lot of power like we are. And when I bought these rigs, the $200,000, and I've, again, been part of high-tech companies for a long time. If you're buying $200,000 out of China, there's a lot of work to getting that money there for them to validate and make sure that it's not fraud, make sure it's a real legitimate company that's buying it, making sure there's funds there. So the way that I sent them $200,000 was using Bitcoin. So I took some of my earnings of Bitcoins, I sent them $200,000, and it was in seconds. I just took my phone out, scanned their QR code on the computer that showed up, and that was it. And it cost me 43 cents for me to transact $200,000. If we were going to pay that with American Express, that would have been $8,000 for us to conduct that type of business. So 43 cents versus 8,000 is a huge savings. And so, that's something we could pass on to our customers and so forth. So the other thing is that they didn't have to validate, if you're familiar with merchant chargebacks and fees to that and so forth. They didn't have to make sure that I'm, legit. They knew that the funds are there because once you send an amount, then it's locked, it's gone, you can't call it back. And so they knew they had their funds and they shipped their product to me so just a lot faster than I would typically anticipate because usually there's that verification process. So, I'm looking at a future where hopefully that we're able to start using more and more of these type of cryptocurrencies and so forth to save costs.
So Pete, how do you see business owners benefiting from blockchain technology?
So in a number of ways, really. So I mentioned before that we at ULedger are focused on data integrity, right? The ability to create your own provable history of data, your own provable data stores. And it turns out that having the inability to prove data today is very expensive. So there are a lot of costs associated with having to justify what your data is since there is no provability associated with it. I mentioned audits earlier. Some $30 billion a year is spent by public companies annually doing audits. And this is inviting people into your environment to see how you run your business and basically generate an opinion about how well your data is managed and how well it can be trusted. So you're paying all that money for an opinion. And that's really kind of the tip of the iceberg. Getting sued is extremely expensive. You as a defendant have a much stronger case if you have the ability to prove I did this at this point in time. My communication with my customer via email was such and such, or whatever the source of data that's being questioned. If you have the ability to prove it, you're in a stronger position. Regulatory compliance is bigger still. By some estimates, we in the US spend 10% of GDP complying with regulations and proving that we've done that. And then if you consider cybersecurity, maybe the biggest one of all, because that one's growing by the day. And just to take an example, the Marriott breach that became public last year in December, I think it was, the actual breach happened years prior. And frankly, Marriott doesn't know what happened. They don't know yet what those individuals did when they got in, what they took, what they changed, right? That may be the scariest thing of all. They don't know if anybody changed any critical corporate data in there. They can't tell. They don't have provability of what their data was at a point in time to be able to compare and know. So it's very expensive. That's one thing. The second thing is that in today's environment, you are forced to place your trust in other entities, and they may not be worthy of that trust. right? Take, for example, there's been many headlines around breaches are a good example. Wells Fargo and the shenanigans with opening accounts and things like that, they're an organization that purports to be a trustable organization, and that was kind of called into question with that whole thing. You could look at Arthur Andersen years ago, perhaps one of the biggest breaches of trust you could name, right? A very trusted organization that folded overnight when it was found they had breached that trust. So the ability to control your own destiny in regards to data and provability is really important, will save a ton of money, and it's becoming something that businesses are really starting to pay attention to now. So that's why people should be thinking about it now.
Thank you. So what do you see the future of blockchain as, Dan?
Yeah, I mean, I think, we've kind of touched on a lot. I think that any time there's going to be information that we really genuinely consider to be sensitive and want to have that integrity, there's going to be a need for that. And blockchain can serve that verifiable piece of information. Like I said before, I think there's a huge opportunity in the identity management space and being able to have a collective group of people actually prove who you are, and in being able to cast your vote but still have that be private, right? I think that's a really important aspect that blockchain can really solve. So I think the blockchain is a unique technology in that there's a lot of opportunities that we haven't necessarily explored yet, but definitely a need, right? And so, I think I'm excited to kind of see what companies start to apply blockchain technology to, how technology evolves. I think anything from medical records, being able to show like, yep, this is the patient's medical history that you have access to. I mean, that's another big problem today. I used to do some work in the medical field, and consolidating medical records from everybody that's ever seen a patient is a beast of a problem in and of itself, and there's a lot of money being spent trying to solve those problems. But the goal is to have one record per patient, right? Like one patient, one record, and I think the blockchain can really serve an invaluable use case there. So I think there's a lot of areas that haven't necessarily been tapped into yet that really hold a lot of opportunity.
I agree. It's alarming whenever government entities get hacked, and seeing blockchain technology as a solution for that potential solution. So Phil, what do you see the future of blockchain?
Well, I see the future as cryptography being a form of consent, where people all have their unique identifier, where they can, kind of like you were talking about on the medical side, if a doctor's asking for a record, then you, as the unique identifier, has the ability to offer that consent. And the internet was kind of established for information, right? So all of us could get that information. Well, blockchain is the missing part to the internet, which is transactional. So it allows us to make transactions, to send and agree to consent, and I believe that that's our future, is blockchain technology, where we're going to have these unique identifiers. We're going to say, not only can this doctor review this medical record, but they can't send it off to somebody else. It has to come back to you for validation, because that's, if you look at the dark web, the #1 paid hack is medical records, because you have so much information that's on your medical records. So typically it's like $35 per record on the dark web. So there's a lot of people that feel mistreated or whatnot in the medical field, where maybe they have a secretary or a doctor that might ask for a record, and that person can make more money just by selling these records online. So we need to find a future where we are protecting our data. I mean, today everything's stored on the web, and so the best encryption out there is blockchain technology.
Thank you. What about Pete? What do you think about the future of blockchain?
Sure. So from my perspective, it's really simple. The future of blockchain is that it's going to be ubiquitous. It's going to be used everywhere. It's just going to be the foundation for how information is transferred, payments are made, data is stored. It's just going to be something that is not questioned. It's just what's used. We're very early days in the adoption curve, right? So you can think about it like the World Wide Web was in the 90s, when you could look at a web page and say, okay, well, that's cool, but what's it for? And then businesses began to adopt that, and pretty soon it became mainstream to have a web presence, and then it became, you're not a real business if you don't have a digital presence. So, the adoption of the web happened in that way over time, and blockchain's the same kind of way. Right now people are looking at it and saying, okay, I think I get the potential, right? This notion of provability, I think I get that, and I want to be provable, and I want to be, control my own fate in that regard, and that is going to accelerate. It'll become mainstream, and eventually we're going to be at a point where, if you're not using the technology and not using it for that purpose, you're going to be looked at sideways. Why aren't you using that? Is there some need is there something you're doing that you don't want known? If anybody remembers, or if anybody could cite an example of somebody using email, let's say, and it wound up potentially costing an election, right? You guys remember that? I don't know if Hillary was trying to do anything wrong. The fact of the matter is there was data that people considered to be important that vanished, and whether that was through mismanagement or done on purpose, I don't know. Certainly her opponents leveraged that, and it may well have cost the election. The point is, she didn't have that provability, and that level of provability, that level of, we call it trustlessness in the blockchain sense, in that you don't have to trust a central entity, you trust the network itself, because it knows what the data is. But that in turn makes all that data trustworthy and provable. And if you are interacting with other businesses, companies, individuals with that level of proof and trustability, that's going to be important, and it's going to reflect poorly on anyone who chooses not to do that. So that's why I think the technology is going to be everywhere.
Perfect. We have some time for questions. Any burning desire? Yes.
What's the likelihood that blockchain's not hackable like all other types of software?
So the question is, what's the likelihood of blockchain being hacked?
So maybe I can touch on that, but you'd probably be an expert on that. But so today the way I kind of describe that to people is we have 256-bit encryption. That's the best encryption that pretty much every bank and many other people are running off of. So we are seeing hacks and vulnerabilities every day to all these major companies, where the blockchain is 2.6 trillion bit encryption and continues to grow. So it's growing every day. Every time somebody else decides to be a miner in the crypto space, they're validating that network. So that's how I would just explain that.
Yeah, I mean, there's always going to be vulnerabilities, because like you said, it's software, right? So that's why there's a lot of scrutiny over, like if you take the Ethereum perspective, lots of money being spent validating the smart contracts, right? So making sure that that it does what it says it's supposed to do, and nothing more, nothing less. So that's always going to play a factor on the software that's being used to put transactions onto the blockchain. But when we talk about cryptographic verification, it's using very solid cryptographic algorithms that have been proven over time, and that's the beauty of open cryptography, right? If you're exploring a company that's writing their own cryptography, that's when you need to be cautious, right? It's proven in cryptography that it needs to be open. Algorithms need to be vetted by the industry, and that's what it uses, right? So the hashing algorithms are there. There's always going to be potential, anytime you're talking about a cryptographic hash, there's always a potential for a duplicate. But the tenet of hashing algorithms is that two pieces of information that might hash to the same value have to be completely different, right? There's no way you can just change a period in a document and then it becomes the same hash. So there's a lot of tenets that the crypto system actually provides to provide that validation and verification. The other vulnerabilities that we actually look for in the crypto systems are things like how are the wallets handling the transactions, and then obviously most important in any public key cryptography is the privacy of the private key, right? The secrecy of the private key. Making sure that your private key in your wallet or wherever it does not get exposed, because that's what actually provides the proof that, I am signing this transaction as Dan DeCloss. I'm the only one that has access to my private key to be able to do that. So there's always going to be those risks, just like in any kind of PKI system. But the blockchain technology on the whole, there's a lot of advantages that you get, and that's why you still need to do your any blockchain company still needs to be doing security assessments and security reviews and staying up current with threats. The other types of threats that occur are when any one entity might overtake a majority of the nodes that are doing the mining or the verification, so that they would actually then be able to control going back in time and changing those transactions. And so that's the value of having a distributed and ubiquitous network where there's just no possible way that someone can overtake the majority of the network.
Anybody else?
Come on here.
I might have, it might be a similar question, but I'm kind of curious, when you're talking about blockchain and vulnerabilities, security versus trackability, right? Is it more that you're going to know who did something to cause a hack, who opened the email or something like that, to have a record of how the hack happened, or to prevent the hack altogether?
Well, both really. So what the blockchain as a data structure, like Dan talked about, what it gives you is the ability to know not only what the content of any particular transaction was at a given point in time, but where it fits in the whole chain. So there is no way to change any one transaction that's part of the history of the chain without the whole chain then not making sense. That's how you have integrity from top to bottom in the chain. So any attempt to go in and assert that a particular transaction, right, that email I sent 2 years ago wasn't supposed to be this, it was supposed to be this, that's provably false, because the message that you're declaring was the message doesn't match the hash that was put in the blockchain at that time, corroborated by all those other external nodes on the network, and fixed in its place in the sequence. So that's what makes it very impervious to tampering, to changing the history of it. And to, in order to do that, you would not only have to rewrite the whole chain, you would have to get all those other nodes to agree that that's the correct history of data. So that's what makes the blockchain very resistant to tampering. As far as knowing who attempted to do that, I think that'll kind of depend on the particular implementation of the blockchain. In the case of the product that we're working on at ULedger, you would have the ability to do that because you know who has permission to access any particular blockchain. And so any attempt to get in and try to declare that a previous transaction is different than what the blockchain thinks it is would be known and would be identifiable. Yep.
I just want to get your opinion on open source blockchain, such as Hyperledger. What's your opinions on that?
So the question is, what is the panel's opinions on open source blockchains such as Hyperledger?
Well, yeah, so there's definitely a lot of different blockchains companies that are coming out, and there's Hashgraph, there's lots of different ones that are trying to prove that theirs is more secure than anybody else's, and it's kind of a race to that finish line to see who really is proven. The nice thing about Ethereum, so the LendingCoin is working off of the Ethereum blockchain ledger. It's been tried and proven for many, many years, and lots of people have tried to hack it, and so far, it's withstood all the tests that people have come after. So, but there is lots of different ones out there, and it's just like ULedger. Yeah.
Right. So from my perspective, businesses tend to use Hyperledger because the use of a public blockchain to secure private and confidential corporate data is kind of a non-starter, right? So Hyperledger is what's known as a private blockchain. You could run it within your corporate environment, and data is kept safe that way. But really, Hyperledger or a private blockchain is kind of an academic exercise. It's a blockchain, but since it's not talking to the rest of the world, to other independent nodes around the world, the data in there is not really immutable. You could rewrite your history, like we just talked about. You could rewrite your history if you wanted to. And so what's really needed is, and again, I'll just put in the plug for ULedger, this is the product that we are working on right now, what we call a hybrid blockchain, where the data is kept private, but via those cryptographic hashes, each node on the network is working together to certify and collaborate each transaction placed on it by whatever company is using that blockchain. And so
Those nodes, since it's public, those nodes are all over the place.
the cryptographic hashes are public, and that's how you get your immutability. That's how you get your independent third-party corroboration of data, even though you're not actually sharing that data itself.
Just the hash.
Right.
Bill, could you elaborate on how you're using cryptocurrencies or blockchain in real estate?
Yeah, so the LendingCoin is currently was the first company to finance property, and we're currently looking for more properties to finance. We have a really strategic offering right now where we're doing a quarter below prime for financing, so we're trying to compete with all the other banks and so forth, but at a very low rate, and that's been getting us a lot of attraction. And so we've prove this by taking investments in. We've raised about $1.5 million, so that's pretty small for commercial real estate projects. But I'm off to New York next week on Friday, working with some big hedge funds that love the concept and they want to put some money into it and see where we go that much further. Because everybody right now, like we have our wallet we're using Coinami, so people could track those tokens on that wallet, and they get tracked all the investments off of our dashboard, so people can see these investments. They know everybody that's come in because of that unique identifier that we talked about earlier. So each investor is assigned a unique identifier. They can track those, and we also took the deeds of trust and also put those on the blockchain. So when an investor logs into the dashboard, they are able to validate every investment and all the properties that have gone into it.
So in addition to that, we have 3 different contracts that's been deployed on as an ERC20 token. So what that means is that one side of it, investors can come in, we can track exactly how much money goes through the company. And then the other part of the contract is that we put the deed of trust where we tie it to an interplanetary file system, and we can have that connected to the blockchain. And finally, when the borrowers pay their monthly loans, it's also tracked from USD to our actual token, our TLC, and it's tracked on a monthly basis to see what's the health of the loan is. Does that answer your question?
Yeah. So it's kind of similar to a REIT, to a real estate investment trust. It's peer-to-peer lending. Mm-hmm. Yep. Yeah.
Any other questions?
Question. How far off is it from seeing the ability of people to do microtransactions using cryptocurrencies and be able to use it as a currency as opposed to kind of a store of value?
I think we're getting close. I think there's a lot of advancements just really where it's not as feasible today is just the speed of a transaction, right? I mean, you go swipe your credit card and it's just instantaneous, and so that's really where the algorithms have to catch up. Things like Ethereum, Divi, they're and Pivx, based off of Pivx, they're speeding up those processes, and so as I think that those companies start to show how fast that their technology actually can do the transactions, and then it gets more widespread, and then I think we'll be pretty close. That's my opinion. I mean, I don't have a projection on as to when, but I think that there's a lot of investment that, and we hit the heyday in terms of the frenzy of cryptocurrency, and that's died down, and so now it's back to the hardcore technologists that believe in the technology. And so I think I think that is now, in the cycle of there was a lot of investment in these companies, and there's smart people working and solving these problems. So I think it's getting close. I don't know if you guys think.
Yeah, I would add to that. I mean, there's 4 billion people in this world that have no access to banking. So for them, a lot of countries, if you travel around, like I was in Guam, and many places took Bitcoin, and that's because Japan has deemed it as a legal tender. And so a lot of places in Japan accept it, and many other countries all around the world, where these other 4 billion people, they don't have the liberties like we do, where we have such access to banking and so forth. Well, how do you buy a pineapple? How do you buy something from a street merchant? Well, they all have cell phones because they can get cell phones for $5 a month. And so they can use cryptocurrency as a form of dealing with transactions. So we're able to buy a pineapple using Bitcoin or Ethereum or Litecoin.
And Bitcoin Cash.
Yeah.
Someone had a question.
Yeah, the only comment I'd add to that is that I'm convinced that it will happen. As to when, it's kind of hard to say. It's best to think of Bitcoin. Bitcoin was a proof of concept, really, right? It's the first real production implementation of a cryptocurrency, and its stated purpose was to be a currency without a central bank. However, it's the design of the Bitcoin blockchain is such that the number of transactions that it can support per second is really quite low. It's about seven transactions per second. By design, it can't support more than that. And so, it kind of proved the concept. You can transfer Bitcoin between, say, you and I without an intermediate bank being in the middle. But it simply doesn't scale to the level of transactions that you would need for it to be a viable currency. And the value obviously has to stabilize. So those things will happen, though. The technology is going to get better. The transaction speed per second that a public blockchain like Bitcoin or Ethereum's better already than Bitcoin was. So it's definitely going in that direction. And yeah, I'm convinced that we'll see all currency via crypto someday.
And if you think about it, what is cash? I mean, most people don't carry cash, where it's all digital money. They say if everybody in the country went to go cash out their savings or checking account, it would take 20 years for the mint to be able to print that much cash. So today everything's digital. So this is just a form of validating it 100, just that much better encryption.
I think people are overlooking the fact that when vendors or companies like Square incorporated Bitcoin as part of their merchant processing. So whether you know it or not, when you're using Square, you can have the option of accepting Bitcoin as well. Next question.
How do you guys see technology getting better in a way that cryptocurrencies won't be so volatile in the future?
So yeah, that's one of my. Oh yeah, go ahead. So go ahead. Did you hear? So the question was.
How do you decrease the volatility in cryptocurrency?
So because cryptocurrency right now is so I still hold quite a bit of crypto, and it just drives me crazy to look at it, because I'll watch there's these huge dips and gains, and then dips and then gains, and so we're focused on a stable coin, and there's a lot of cryptocurrencies out there that are focused on that stable platform, and USD Tether, yeah, USD Tether is one that's very stable, and they focus on making so it's like $1, and so you don't have those fluctuations. So there's a lot of times I'll move my cryptocurrency or some of them into USD Tether, wait a little bit, they see if it evens out, moves them back, and so forth. So with businesses like the LendingCoin, I see a lot more stability, where you're not going to have that huge wave, because yeah, it drives me crazy.
I honestly don't have an answer to that one. There's so many different coins out there, and I think that everybody just they think there's just a lot of, still a lot of hype around it. So that to me causes a lot of that volatility. So until things stabilize and people start to say, like, yeah, this is the one that we, as a collective human society, say, like, yeah, these are kind of the top 3 that we're going to use. Mm-hmm. That's my theory, but I mean, I think there's a lot of other factors that I'm not as smart to figure out.
Perfect. Thank you so much for being here. Thank you, Phil, Dan, Pete. Thank you.
Appreciate it.
bringing me down.